I am AI Avatar of CA Ratan Mundra. In this video, we break down the Finance Bill 2026 sector by sector. What has changed, who is impacted, how it affects cost, compliance, and cash flows, and what actions businesses and individuals should take now. Impact, how to use. Times sets decision-making context for CFOs and promoters. Times helps viewers quickly identify relevant sectors. Times useful opening for client-facing advisory videos. Before diving into sectors, timing is critical. Most provisions in the Finance Bill take effect from 1st April 2026. Certain customs tariff changes apply from 1st May 2026. And some GST amendments will become effective from a date that the government will notify later. Impact, how to use. Times avoids wrong period compliance errors. Times helps tax teams plan staggered implementation. Times important for contract pricing and ERP updates. For IFSC units and offshore banking units, the Finance Bill significantly expands the tax holiday. The deduction period is now extended to 20 consecutive tax years, or 20 years out of 25 at the taxpayer's option. However, eligibility is tightened for units starting on or after 1st April 2026. The unit must not be formed through splitting, reconstruction, reorganization, or transfer of an existing Indian business. The bill also clarifies the relevant tax year based on approvals and registrations under the IFSC-SCA Act. Impact, how to use existing units. Times rebuild long-term financial models with 20-year horizon. Times maintain strong documentation proving not formed by reconstruction. Times existing IFSC units gain higher valuation certainty. For listed companies and promoters, the bill amends capital gains taxation on buybacks. Where the shareholder is a promoter, an additional income tax applies over and above normal tax. The definition of promoter is aligned with SEBI buyback regulations for listed companies and Companies Act thresholds elsewhere. Impact, how to use. Times promoter level exits via buyback become less tax efficient. Times boards must reassess buyback versus dividend versus secondary sale. Times important for treasury and capital allocation planning. The tax exemption on redemption of sovereign gold bonds is now restricted only to individuals who subscribe at the original issue and hold till maturity. Additionally, for dividend income and specified mutual fund or unit income, no deduction is allowed against such income, overriding earlier interpretations. Impact, how to use. Times secondary market SGB buyers must re-evaluate tax outcomes. Times investors should revise FY 2026 to 27 tax projections. Times advisors should recalibrate yield expectations. For payroll-heavy employers, the bill aligns employee contribution deductibility with the income tax return filing due date. This reduces disputes arising purely due to deposit timing mismatches while still requiring disciplined payroll compliance. Impact, how to use. Times lower litigation risk for PFESI timing issues. Times strengthen payroll audit trails and reconciliations. Times HR and tax teams should update compliance SOPs. The bill introduces relief under the Black Money Act by excluding certain foreign assets other than immovable property below 20 lakh rupees from prosecution provisions with retrospective effect from 1st October 2024. It also introduces a Foreign Assets of Small Taxpayers Disclosure Scheme 2026 covering declaration, payment, immunities, and exclusions. Impact, how to use. Times reduces extreme downside risk for small overseas investors. Times carefully screen eligibility and exclusions. Times prepare valuation evidence and asset categorization. The bill removes the need for prior permission to move warehoused goods between warehouse subject to conditions. Advance rulings under customs now have a defined 5-year validity with extension mechanisms. It also clarifies duty treatment for fish harvested beyond territorial waters by Indian flagged vessels. Impact, how to use. Times faster logistics and reduced dwell time. Times greater certainty for long-term import planning. Times seafood exporters gain clearer tax treatment. The bill simplifies GST treatment of post-sale discounts by removing strict invoice-linked agreement requirements, relying instead on credit notes and ITC reversal. It also expands provisional refunds and removes thresholds for refund claims on exports made with tax payment. Impact, how to use. Times FMCG and distribution businesses can simplify trade schemes. Times exporters benefit from faster cash flows. Times update credit note and ITC reversal controls. The bill omits the intermediary services clause under IGST law. As a result, the place of supply now follows the general rule, location of the recipient, potentially reducing disputes for cross-border service providers. Impact, how to use. Times IT, consulting, BPO exporters gain clarity. Times review service classification and contracts. Times may unlock refund and zero rating benefits. Securities transaction tax rates are increased for options and futures. This directly raises transaction costs, especially for high frequency and short term strategies. Impact: how to use. Times traders must revise break even calculations. Times brokers should update disclosures and tools. Times algorithmic strategies may need recalibration. The bill revises national calamity contingent duty rates on chewing tobacco, gutkha, and related products, effective from 1st May 2026. Impact: how to use. Times manufacturers must plan price revisions. Times inventory and duty provisioning required. Times update tax masters in ERP systems. Each sector should now move from awareness to action, revalidating eligibility, revising contracts, updating SOPs, and recalibrating financial models. Common mistakes include missing effective dates, weak documentation, and delayed system updates. Impact: how to use. Times convert law changes into internal action plans. Times prevent avoidable audit and litigation exposure. Times useful slide for board or client presentations. If you want, this analysis can be converted into a sector-specific memo or a compliance action plan with templates, SOPs, and checklists tailored to your business. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling complaints, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations. And FinTech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.